A lot has changed since I presented, actually not that long ago. When I last presented, I think it was late November or December, but you know, there's been a fundamental shift, certainly in terms of investor interest in the uranium sector. So let me start and talk a little bit about Yellowcake. Yellowcake is a company that holds physical uranium, and the intention is to provide investors with an opportunity to invest in the uranium commodity, which is not easy to do because it's such a regulated commodity. So by investing in our shares, investors can get exposure to the uranium commodity price. So as I said, we hold physical uranium. We don't have any assets or any operations other than the physical uranium that we hold. So we don't have any exposure to exploration risks, mining risks, processing risks, etc. We have set ourselves up in a very low cost structure. We have only 2 employees. We both work from home. So and we've outsourced a lot of the activities in terms of IT, accounting, that sort of stuff. And then the key strategic feature of this company is that we have a contract with Kazatomprom, which allows us to buy up to $100 million of uranium per annum. And I'll cover that in the next slide. In terms of why we set Yellowcake up, I mean, when you look at the supply-demand fundamentals for uranium, they certainly suggest that the uranium price has to go up. Demand is visible and growing. Supply has been challenged because of an extended period of low prices. There have been cuts to current supply and very little investment into future supply, which will be needed. And the first wave of COVID-19 last March really highlighted the supply side vulnerability. If I move on to our contract with Kazatomprom, as I mentioned, this is a key strategic advantage that we do have. This is an agreement that was put in place at the time of our IPO in July 2018. It's a 10-year framework agreement and allows us to buy up to $100 million of uranium annually, essentially at the spot price. Now, the uranium spot market is not very deep and liquid, and trying to buy $100 million in that market would certainly move the price quite significantly. The deal with Kazatomprom is not exclusive. We are able to go into the spot market or purchase from other suppliers if it's advantageous. But you know, given the contract that we do have and the fact that we can buy at the spot price, it's a very good contract for us. If I look back at last year, you know, it really was a transition year for uranium. There was 4 factors that came together and really ignited investor interest in the sector towards the end of last year. Firstly, COVID highlighted the supply side vulnerability. Now, one has to bear in mind that 4 countries produce 75% of the world's uranium. 3 of those 4 countries were impacted during COVID, and about 40% of capacity was impacted in a very short space of time. In contrast, the demand side held up really well. Nuclear power stations continue to run. Yes, there was an impact because GDP impacted electricity demand, but the nuclear power stations moved or operated in line with overall electricity demand. There were a number of policy issues that were overhanging the market really from the time of our IPO. There was the Section 232 investigation into imports into the US, and then the Russian suspension agreement, which was an agreement between Russia and the US, which first came about in the sort of late 80s, was due to expire end of last year. The Section 232 investigation ended. The Nuclear Fuel Working Group delivered their report with no impact on the commercial market, and the Russian suspension agreement was extended through to 2040 under a new set of rules. So all of those uncertainties that were overhanging the market were resolved. And I think the final piece was a sentiment change. Really, during the course of last year, we saw a sentiment change towards nuclear, with a number of countries adopting carbon neutral policies and including nuclear in those policies. And really, the outcome of those four factors coming together was that the investor interest in uranium kicked off significantly. And I've used here as the Global X Uranium ETF as a proxy for uranium stocks. But really, from the end of October through to today, the Global X ETF is up about 80%. And if you look at individual stocks, some of them are up to 300%. And yet the uranium spot price hasn't really moved. That interest in the by investors really created an opportunity for us. For the first time in a long time, our share price traded at a premium to net asset value. And in February this year, we sought to raise around $110 million because we wanted to fully exercise our $100 million option with Kazatomprom for this year. I must say I was a little skeptical about what support we would get, but the support was very, very strong, to the point where we upsized our offering to $140 million. So the $100 million that we, out of the 140, has been earmarked to acquire 3.5 million pounds of uranium from Kazatomprom. We're due to get delivery of that product somewhere between July and August, or June and August. And then immediately after the equity raise, we went into the spot market and purchased $15 million worth of uranium for 540,000 pounds, for 540,000 pounds of uranium. A feature of the equity raise that we did in February was that we had very strong retail support. The offering via primary bid was open for about 2 hours. We raised $5 million from 380 shareholders, and only 60 of those investors were existing shareholders. So, very pleasing for us. And shortly after we came to market, or at about the time that we came to market to raise equity, a number of other companies in the uranium space started raising equity. And by our count, since mid-February when we raised our equity, around $800 million has been raised for uranium companies, which is quite unbelievable. If we go back a couple of years, the global market capitalization of the whole uranium sector was less than $10 billion. So we've seen, almost $1 billion raised in sort of 2 months. And a number of those companies that did raise money were aspirant producers. So they all had projects. And what they did with the money that they raised, they essentially invested it in uranium through purchases via the spot market. And we see what that did to the spot price from around early March. If you look at the spot market volumes for January and February, it was about 5 million pounds each month. In March alone, 10 million pounds were purchased by ourselves and these other companies. So, the equity that was raised was put into uranium and had a significant impact on the price in the short term. Let me just talk a bit about nuclear and the industry. Nuclear is a key element of global energy supply, and we are very optimistic about the demand side for nuclear. Nuclear is one of the cleanest forms of energy, and it can play a role alongside the other clean technologies in a low carbon future. Not only does nuclear produce electricity, but it also produces heat. So in the hard to abate sectors such as district heating, nuclear can play a role by providing clean heat. And it can also play a role as an energy source to produce green hydrogen in a hydrogen economy. If you look at where the demand is coming from, future demand really will come out of China, India, and the Middle East. China had 13 reactors operating at the time of Fukushima. They currently have 47 reactors. They recently released their 14th five-year plan, and it talks about taking their 50 gigawatts of current nuclear capacity, generating capacity, to 70 gigawatts by 2025. And CNNC are talking about 100 gigawatts by 2030 and 200 gigawatts by 2040. So, you know, a very, very significant increase in capacity there. And they currently have 17 reactors under construction. So, you know, it's not just on the drawing board. Russia recently came out and said, in terms of their commitments to carbon neutrality, they will have 25% of their energy supplied by nuclear by 2040. That implies another 26 reactors they need to add to their existing fleet. The UAE has got a 4-reactor program. The first of those reactors went commercial earlier this year. The second one will go commercial later this year, and the other 2 are almost 90% complete. I mentioned earlier about a sentiment change towards nuclear, and we definitely are seeing that. There seems to be a shift in the willingness of governments to talk about nuclear openly in the context of greenhouse gas emissions and carbon, you know, carbon emissions and carbon neutrality. We've seen a number of countries make commitments around carbon neutrality. And here in the UK, last year, the government's 10-point green plan explicitly included nuclear and set aside £500 million to invest in small modular reactors and advanced reactors. In the EU, the European Commission's Joint Research Centre, which is the technical arm or the scientific arm of the EU Commission, their recent draft report concluded that nuclear energy does no more harm than the other fuel sources currently included in the taxonomy. And that's an important step forward. If we look back around this time last year, nuclear was excluded from the first round of the taxonomy, and it now looks like we're one step closer to having nuclear included in the taxonomy. And even in the US, there's now optimism for government level support to keep the existing reactors running and also to invest in advanced reactors and small modular reactors. Just speaking about small modular reactors, we really think this is a game changer for the nuclear industry. You know, these reactors are smaller scale, they are built with modularity and factory fabrication in mind. Because they are smaller capital projects, the financing risk is lower, and therefore they're easier to finance. And also, you know, they can play a role in terms of distributed generation and a future hydrogen economy. Here in the UK, Rolls-Royce is one of the companies that are investing heavily in the space, and they say they will have a commercial reactor available by the end of this decade. A key feature of the uranium industry or the nuclear industry is long-term contracts. Utilities that consume nuclear fuel essentially contract for about 85% of their fuel requirements through long-term contracts. These contracts have been rolling off, and particularly in the US, by 2024, US utilities are less than 50% covered. And it's, you know, these utilities typically hold about 2 years of fuel in the US and 3 years in Europe. And the fuel cycle itself is about 18 to 24 months long. So to go from U308 all the way to fuel rods for a nuclear reactor can take up to 2 years. So we do believe that these utilities will start coming into the market to look at term contracts, and we believe it'll happen this year. We've seen a long period of low prices, and that's had an impact on current supply. A number of companies started cutting supply late 2016 into 2017 on the back of these extended low prices. And we saw global production go from around 160 million pounds in 2016 down to 124 million pounds last year. And last year was, you know, additionally impacted by COVID. The other aspect of the sustained period of low prices is the fact that very little investment has gone into new supply. Mines are wasting assets. This year alone, in February and March, we saw 2 mines shut permanently. Both of these mines, the Ranger mine in Australia and the Commagnac mine in Niger, have operated for almost 40 years and collectively recently produced up to 7 million pounds of uranium. That uranium is now gone. And unless we see prices rise to induce new supply, we are going to see supply shortages. And the forecasts I've seen are that we will probably see supply shortfall at the end of this decade, 2030, of about 50 million pounds. Now, bearing in mind that Kazakhstan as a country, which produces just over 40% of the world's uranium, produces 60 million pounds. So you're almost short one Kazakhstan by the end of this decade. And then just finally, Yellowcake was set up to provide pure exposure to the uranium price without any operating risks. The company has a low-cost structure, and we have a means to grow through the contract that we have with Kazatomprom and the ability to buy up to $100 million of uranium per annum. In terms of the fundamentals, we believe that the supply side will struggle to meet demand. Demand is growing, and the COVID last year certainly highlighted the supply side vulnerability. The real trigger for movement in the uranium price and the uranium market will be the utilities coming back to contract, which they do need to do quite soon. So that covers my presentation. Thank you, Roland. Happy to take any questions.
So starting off, why would I buy Yellowcake instead of an ETF?
Well, if you look at the uranium ETFs, there are 3 out there, but they hold some of us, some of UPC, they hold producer, future producer companies. So it isn't really a commodity ETF because you do get project and exploration risk bundled into that ETF. And until recently, some of those ETFs even held non-uranium stocks like gold companies. So the 2 really pure means of gaining uranium exposure is ourselves, Yellowcake here in the UK, and then Uranium Participation Corporation, which is listed in Toronto.
And on to that, could you please comment on Sprot's takeover of UPC and what it means for both Yellowcake and the wider uranium space?
Well, I think it's a very, very interesting, aspect of what's happened. Certainly Sprott with its other, silver and gold funds is very capable in the ETF, commodity ETF space. I see it as probably a positive for us. Firstly, if Sprott is more active in the spot market, I mean, if you go back, when we IPO'd in 2018, we've raised $370 million to buy uranium. I think in that time period, UPC raised 20. So, if Sprott is more active and more active in the spot market, that will be good. And I think it will show the value of the contract that we have with Kazatomprom. Because if our stock continues to remain at a premium to net asset value, we have ability to add $100 million of uranium per annum. And I think, to try and do that in the spot market will be quite tricky.
Next one, what do you do with your purchased uranium?
So the uranium is held in a regulated storage facility. There are only 3 in the West. There's one in Canada, one in France, and one in the US. And we have contracts with the facility, the Cameco facility in Canada and the one in France. So the uranium is stored at those facilities, and all transactions in uranium take place via book transfer at those facilities. So, we don't transport any uranium. We're not licensed to transport uranium. So if I want to sell uranium to you, then it's just a book entry from my name into your name.
Are you going to sell any of the uranium?
We're a long-term buy and hold vehicle or entity. We did sell a little bit of uranium last year, and that really was because we were at such a big discount to net asset value. I think after COVID, we were north of a 30% discount to net asset value, when at that stage, all we held was 9.6 million pounds of physical uranium and around $6 million of cash. And that uranium is valued every day. So, we had uranium, which is one step away from cash, and yet we were at a 30% discount to net asset value. So we sold 300,000 pounds of uranium. We raised $10 million and bought back our own stock. And the purpose really wasn't to try and close the discount, because you can't fight the market. But for us, it was the cheapest way of buying exposure to uranium. We sold the uranium at 33. we're buying our stock, really at a 30% discount to net asset value. So it was accretive for us.
Next is Biden. What's his view on nuclear, and does the US matter?
The US does matter. The US is the biggest consumer of uranium. They've got a fleet of about 94 reactors. They consume 45 million pounds of uranium. They produce virtually nothing. So it is the biggest consumer of uranium in the world, and it does matter. In terms of Biden, the Democrats, pre the elections, included nuclear in their energy policy for the first time, I think, in like 47 years. And he's come out now with his energy policies and his Rebuild America policies, and there's a lot of talk about keeping the current fleet running, providing subsidies for them, because wind and solar already get subsidies. So the cheapest form of capacity is the existing capacity they have. And I think that there has been bipartisan support for nuclear in the US. The Nuclear Fuel Working Group talked about setting up a stockpile or a fund to buy uranium by the government, and that was supported by both parties. But certainly, the Democrats seem to be more pro-nuclear than they have been in the past.
So do you think there's been a general shift in sentiment that reactors are safe to build and decommission, or more safe?
I do think there has been a shifting sentiment. And I guess my little example is I did an interview with the FT recently and also with the Wall Street Journal, and they wanted to talk about uranium, nuclear in the future. So I think mainstream press now is talking about nuclear in the context of carbon neutral future, how it can play alongside existing technologies of wind and solar, because nuclear does run 24/7. So I do think there has been a sentiment change, and it seemed to come about last year. Japan said they'd be carbon neutral 2050, 20 to 22% nuclear. China said it'd be carbon neutral 2060. Russia 2040, the UK 2050. So I think there seems to be a sentiment change and a greater willingness to talk about nuclear. I'm not saying there's a massive tailwind, but I think the pendulum has swung a bit.
And final one for me, if you continue to trade at a premium, would you look to raise more equity?
We would like to. We're a little constrained because at our AGM every year we seek certain permissions to issue shares without preemption rights, and we've exhausted that for this year. The AGM's in September. We always have the option of calling an EGM. But we've still got some cash on our balance sheet, which we need to spend. Out of the 140 that we raised, we've spent about 115. We keep some back for working capital, but we've still got a bit of surplus cash. But I think having exhausted the Kazatomprom option for this year, to go out and raise a lot of money, one has to be quite comfortable that you can spend it. And we'd have to go into the spot market and spend it. So I think, at the moment, raising the money seems to be the easy part. Buying the material in the spot market is less easy. And we announced a small purchase today, and it wasn't easy to do. So that I think will be the challenge.
Lovely. Well, Andre, thank you very much indeed for the presentation. As you said, it's been lots happening there since the last time you came. So thank you very much for joining us.